Hello, everyone. For our next session, we're going to talk about procurement in the AI age. We have two amazing speakers that are joining us. We have the general partner of the Council Capital, Amber Illig, and general partner of the Urban Innovation Fund, Clara Brenner. Welcome, everyone.
Thanks.
It's so
Thanks for
good to
having
have
us.
you. It's so good to have you both here. Today, we have participants from large enterprises to small to medium enterprises. We also have some founders that are joining us. So I would like to keep the conversation. Obviously, we're talking enterprise AI adoption, but having you here, I would like to focus on both sides of the conversation. What are enterprises looking for, and what can startups do that are better catered for enterprises? Both of our panelists are experts in software, early stage technology software for traditional industries. So they are uniquely qualified on this panel, and I'm really happy to have them. I'd like to start the conversation by talking a little bit about what has changed in the past 2 years between traditional software SaaS products to AI products. What do you see that has fundamentally changed?
Yeah, I
Amber,
guess
you want
I,
to
I
jump
could
in?
kick off. Yeah, so I think, previous to the last 2 years, there was one pricing model for all SaaS products. It was, you pay a monthly subscription. Maybe there's a, free tier, and then there's a paid tier, and then there's a team tier, and then an enterprise team deal. And so it's pretty straightforward, and the process was straightforward, and everything was focused on a workflow. Today, we see multiple pricing strategies. Some companies are basing their pricing off of usage, and others are sticking with the SaaS model for their AI products. And then the biggest difference that I see is that there's this huge utilization problem if you're looking at it from the startup's angle. If you're an enterprise, you're more willing than you ever have been before to try new technology because you don't want to be left behind. You want things to be more efficient, and your peers are checking out all those different AI tools. So there's a lot of pressure in boardrooms right now to make sure that their teams are running efficiently and that everybody has a key role to play and that we're using technology where we can. But what that's resulting in is just a proliferation of tools being used inside of enterprises. And I think for startups, what has changed is that it went from being really hard to get a paid pilot or a pilot of any sort with a big enterprise to all of a sudden everybody's willing to try their product, but you're not kind of out of the woods at that point. Like you need to make sure that your product is sticky, and you don't quite know if you have product market fit just by getting a yes these days. So it's kind of like the bar used to be high to get in the door. Now you can get in the door, but there's a bigger bar coming after that to see if they're going to renew. Curious to get your
Yeah,
thoughts, Clara.
yeah. Maybe just building on that, I'll note that a sort of outcome of the environment that you're describing is that oftentimes we're seeing multiple products being purchased at the same time, or pilots,
Mhm.
even full contracts running side by side, maybe along a new tool or alongside some existing tools. And the goal is really to compare potential outcomes. And so we're seeing that, just like you're saying, it's not kind of the final stage. It's almost like step one of an evaluation process is getting in the door, because you may be up against one, two, three other products that you're going head to head to, which is new.
Yeah.
Incredible. And we've always talked about also how quickly the market is saturating. When there's a solution that's getting adopted, immediately we have 10 clones overnight. What gets focused these days? What do you think companies need to do in order to get enterprise attention?
I can
I'll
I
let you
can handle
start.
that one. Yeah, sure. I'd
Yeah.
say, if you're a company that's competing against 30 other similar startups in a really crowded space, you're probably not the right deal for a firm like ours. So I'm maybe not the best person to give you an answer, but I guess I'll just say that there are a lot of unmet enterprise needs. It does feel that we're in extremely early innings of this AI transformation. And so we always try to encourage companies to think outside the box, if you will. But I guess to answer your question more directly, we do see a good number of our early stage companies, like at the pre-seed, finding a few partners, maybe just one, and really offering to build specifically for them. And
Mhm.
certainly there are risks to that strategy, just because it can pervert your whole product roadmap or send you off on some kind of wild goose chase. But it can also give you a seriously deep level of insight, I would say, about what your customers actually want, and allow you to kind of move in a different direction or move more quickly than some other folks who might be entering the space and who don't have as much familiarity with the actual sort of urgent hair on fire problem that a customer has.
Mhm.
Yeah. I would say if you're in the early stages of founding a company, one thing to consider is this a unique enough problem? And am I the right founder to solve it? Like when I think through the companies we've invested in, and particularly those that are doing well, they have really strong founder market fit. And in this world, everyone wants to build an inventory management tool or a new procurement tool, or, if you think of any function inside of the company, somebody wants to build a tool for that, but that in many cases is not specific enough. So you want to look for an area where like maybe you've had work experience before, you've seen how nuanced a particular workflow is, and you felt the pain yourself. You can speak the language of the customer. You have a deep network in that area. That's where we've really seen companies take off. And then the other thing is, I think this has always been true, but just now more than ever, making sure that you have hard ROI attached to your product. I think that's going to be what gets people's attention, not just, hey, this is a co-pilot that can help you be a little bit better at what you do. It's like, we have measured that we can save this much time and that equates to this much these many dollars, or hey, we're helping you avoid this problem that would have cost this much. And just, making sure it's really critical that customers understand how much they're saving by working with you.
Yeah,
Mhm.
maybe I can give you just an example. We have a portfolio company that runs an A/B test. So when they were really early, they did this as their pilot stage, and now it's just kind of stage one of after they've signed a contract, where they actually um, mine through your old system's data and compare how the system is running versus how it's running now using their new tool. And it really helps them benchmark. And actually demonstrate like on a granular, like we analyzed your data, like this is what would have happened if you had just run your old system versus this is what's happening with our new system. And they literally, like, you log onto the platform and the first thing you see is the A/B test every time. And it is helpful to quantify using a customer's own data to sell it and really make it clear why it's so much better to be using this new offering.
Yeah, I'll throw one more in just for anybody listening too. Is that we have one founder in our portfolio that actually used like a services-based model before turning it into a product, which is a dangerous path. But if you go in with intention to do that, it can work out really well. So she was a fractional CFO for a bunch of different healthcare private practices and started to realize what their top issues were in back office, just managing claims as they came in, making sure they're getting paid out on time. The company's called Joyful Health. And, after 6 months of acting as everybody's fractional CFO, they identified major pinpoints or pain points for these customers, built a product around it. And then they had that list of customers just ready to go that already relied on them. They already saw them as a credible person that could build a product for them. So I think that helps you stand out too, just a pre-existing relationship. And then having been on the ground as almost like a consultant working for your customers first.
Very true. Very interesting. I want to talk a little bit about, trust and security in software solutions. For two reasons. One is there's a lot of claims out there. Everybody is an agent. Everybody is enterprise grade. But also we're seeing a lot of code that's, just, vibe coded, products that are vibe coded, and not having. We're seeing the rise of solo founders who don't necessarily have engineering teams until they grow really big. And so we're seeing a lot of loss of trust on the enterprise side, and I'd love to hear your take on that. What are you seeing on that? What can startups do, and how can enterprises protect themselves?
And first, I would say, if I'm being honest, I think there's a significant percent of a customer base out there that doesn't actually care what percent of the product is delivered agentically or not. Like, they just want a cost-effective solution. Certainly, there are customers who care about this for a variety of reasons, and certainly as investors, we care about this. But I think ultimately, like, the bigger hurdle for these sort of new generation of AI native companies is that enterprise grade point that you made, which is, I think, a large part is really just their security posture. So like SOC 2 compliance, regular pen testing, having professional looking documentation for their sort of security posture. I'll give a shout out to one of our portfolio companies, KeyGraph. They help companies get SOC 2 Type 2 compliant in about 2 weeks, and essentially then after that serve as your outsourced security and compliance team, really on a go forward basis. And they can help with things like onboarding new employees with their new devices and filling out customer security questionnaires. And we've just seen an explosion of need for offerings like that, just because most startups, as you're saying, don't have a big team. They do not have a security team, and even if they do, it's probably nestled within a CIO's office, or CTO's office. It's pretty underwater, and so we've definitely seen like the conversation around security posture accelerate, even for like pre-seed and seed stage companies, which used to feel like more of a later stage conversation. Like once you get big enough to service that really large enterprise, and now we have seed stage companies that are selling to Fortune 100 companies, and they need to figure it out fast.
Yeah. And I would also say like founder backgrounds matter a lot. So, and it doesn't have to be, the founder that you're talking to on the initial sales call, but you might look for somebody else on the team that has actually operated within your industry if you're evaluating this as an enterprise. Just is there somebody on the team that kind of understands the rigor that comes with like kind of operating an enterprise company? Because I think in the past, founders have been coached like do now and apologize later to build a big company or move fast and break things. I think those mantras don't really work when you move into the enterprise level. And as Clara said, like we're getting more and more early stage startups serving enterprise. So you want to make sure that there's not like a information gap there in terms of what your expectations are and what they're able to deliver. And then just making sure, I mean, you're all enterprises listening to this conversation. You can afford to do a technical review. You definitely should, because people are vibe coding things together that may be non-technical, and you can get really far by doing that. But you want to make sure nothing is missed. And it doesn't have to be that you dig into all of the code, but just at least understand the architecture and if it's going to actually meet your needs. And then understand the privacy and governance that's being used at the company too. A lot of these foundational models that these companies are building on top of, like OpenAI, are able to pull up, information in any court case if they need to. And you just want to understand what protections are in place to make sure that you and your customers' data doesn't get shared in certain places where, it could be extracted and linked back to you or your customers. So I think just asking questions and making sure you have those answers and they've put policies in place that they're actually acting on is important.
We've touched upon that timing to close in the beginning of like how, it's been so easy to try solutions, but so difficult to close the contracts. What do you think is that magic formula there that gets a startup pilot and converts it into a full scale solution for
Yeah.
enterprises?
Yeah, I can start here. I think like enterprises are more than willing than ever to do pilots right now. So that's in the founder's favor, but you want to make sure you don't squander it. And so, and I think it's in the best intentions for the founder and for the enterprise that they're trying to serve to have a really structured contract in place. So don't make it kind of, loosey-goosey. Let's do a pilot, see if it works out, and maybe we'll touch base in 6 months or something. You want to make sure that there's a clear time frame and a clear KPI that you're trying to meet with this pilot. And I would encourage both the enterprise and the startup to do a paid pilot, because if the company isn't willing to pay for the pilot right off the bat, you already know that something might be up with your product market fit. And I think you should go back to the drawing board and make sure that you come back to them with something they are willing to pay for, because maybe they're now at 95% confidence that this is something they need. So ideally, it will be successful at the end of 3 months. And then one of our companies, Quintess AI, I'll share them as an example. They structured it so that these pilots actually automatically become recurring customers after they're done, as long as they meet the KPIs that were agreed upon at the start. So Quintess is doing voice AI and ticketing for maintenance and repair workers, starting with the rail industry. And so they're already working with 3 multi-billion-dollar rail companies globally, and they're able to basically convert directly after the pilot. And they've already done that with 2 out of 3 of those.
Incredible. Incredible.
That's definitely, I'd say, a really important feature of any pilot contract is the conversion. Definitely the metrics to make it very clear, like what is success, just so that everybody is aligned, but also the rolling into the continued contract is really important, certainly for the startups. But I would also say it can be a really helpful negotiating opportunity for enterprises. You can oftentimes command pretty great pricing in exchange. So you can say like, look, we will, with of course the opportunity to opt out. But like we will, assuming things go well, continue with this contract, but we want a significant discount, for example. And I think a lot of startups understand the value of these longer term contracts and are willing to take those types of concessions. And so I would just point that out to the listeners of this panel to say like that's a real moment of pricing power.
Incredible.
Totally.
Um, in the past year, we've seen most AI initiatives have started top to down. We see a lot of memes around it with the CEO telling everybody, go get AI, and I want to understand a little bit your thoughts on whether in 2026 we're going to see a more bottom to top approach and change. And if yes, do you see it coming from specific AI divisions within companies? Do you see it coming from, different divisions pushing their own initiatives? What are you seeing?
Kind of all over the board. I would say generally there's been a perception that enterprise purchasers, whether it's top down or bottoms up, are experimenting with AI, but they haven't necessarily translated that into a long term strategy yet. And so I think for us, like regardless of where the motivation is coming from, we spend a lot of our time talking with our founders about trying to embed themselves really deeply with their customers to
Mhm.
make it harder to rip out, and not just within one division but many divisions. So like we have a company called Variance that does content moderation using AI. And they started by doing user generated content, and then they started doing internal content, and then they started doing financial content, and now all of a sudden they're serving many departments within enormous enterprises. And it just makes the ROI obviously so much more significant, because certainly these large purchasers would prefer to have fewer vendors as opposed to
Mhm.
many, but also like they have so many data points to show how useful they are with their core use case, which is the same. It's content moderation, but the whole point is like there are rules. AI is a great applier of rules, and I think that's been a really key metric for us. And maybe like how that translates, I'll just note a big metric that we've seen our founders spend a lot of time talking about, and especially as they graduate to Series A or Series B, is not just net revenue retention, but gross revenue retention, which is an evolution of the conversation. Like it's not just, you've added more revenue, and so it kind of hides the loss maybe of some customers. Like gross revenue retention, you cannot hide the loss of customers, and
No.
that's really important. You want both the gross revenue retention showing you haven't lost any customers, and the net revenue retention meaning you're upselling them, you're constantly adding use cases and getting more and more valuable within a single enterprise. And so for us, like we can't control where the motivation is coming from as founders or investors, but we can control how many touch points we have within an enterprise and how much value we can deliver.
Yeah. I would just plus one what Clara said. I think enterprises are still experimenting right now, which means there is top-down support to be trying all of these AI tools, which means even if you're not on the top level of a company, like you can still say, hey, I want to use this tool, and no one's going to say no to you because your boss and their boss and their boss are all excited about trying new things. But if I were to kind of like roll my magic 8 ball and make a prediction, I do think at some point this year, maybe around the middle of the year, there could be sort of like an AI correction. And I think what's going to happen is these internal teams, probably the finance team, are going to take a look at how many different tools they're actually using across all these different orgs inside of their companies. And they're going to realize there's a lot of overlap. Even back to an earlier point that Clara made, like, sometimes there are multiple contracts going on to solve the same exact use case. And so imagine like there could be different teams that don't even know that the other team is using something similar. And so I think it's going to result in a lot of cuts, even in companies that have gone past the pilot stage into the contracting and live stage with their customers. And so, again, like getting those deep tentacles into organizations, make sure you have a really great account management team or process around that relationship is really important. And by the way, I think this is going to be really good for product-led growth companies, because when you do lose that top-down support, or it starts being like managing your headcount every year, like managing your AI tools every year. At that point, the tools that are going to win are going to have a lot of support from the workers that are on the ground saying, "Hey, I get value out of this, and I need it. I need to be able to collaborate with my teammates, and we need a package as a team." And then it just flows up from there.
We'll probably see tools developed around that as well. That should
Yeah.
be interesting. I wanna one of the last things I want to talk about is this rise of the incredible hockey stick growth companies. We're seeing exemplary companies reaching to 50 million, 100 million ARR in just, 2 years. It's something we've never seen. And I know both of you have invested in companies that perform that way. So I wanna understand a little bit, what's the magic about them? What do you see any like pattern recognition with what they're doing? It's just incredible in terms of, new market development, and I want to understand a little bit if you see any like repeatable patterns there.
Yeah, I've thought a lot about this because once you hit one of those, you're like, now the pressure's on to keep hitting these companies.
Yes.
So yeah, I'll give one example, GCAI, who I think you've met the founder too, Sena.
Yes.
But it's built by Cecilia Zanidi, and they're an AI co-pilot for legal teams. And they basically help in-house general counsels draft documents, review documents, work through multiple initiatives across a company, and they integrate to all these different workflows that general counsels in-house need to be using to work with all of their cross-functional peers and CEOs that they work for. And so I think the reasons why it was so successful, just for context, we invested and then 18 months later, we were first commitment in. So the company had like zero revenue when we started talking about investing. It was just two founders. And then 18 months later, they had not only just skipped from pre-seed to Series A, but they'd also then raised a Series B. They had grown to 10.8 million ARR in that period of time, and they're now much higher than that. And they had brought on like awesome investors, and they at that point had like over 1,000 customers, many Fortune 100 customers, many tech unicorns, Fortune 500, et cetera, and global customers as well. So it was just crazy to see what could happen in 18 months. And I think the things that came together to make it possible were the founder was deeply aligned with their market. So Cecilia had, 15 plus career in in-house legal roles at the center of AI technology and law. So she wasn't just operating in the legal world for a long time or just operating in tech, trying to figure out legal as she launched her company. And she had built products and teams and processes from scratch before. So she was founding lawyer on Amazon Alexa, and then she was VP of legal at Cruise when they were around 400 employees. I think she stayed till they were probably around 2,500 employees. So you see a lot of different types of problems that in-house general counsels need to solve if you've been through those stages. And then she was general counsel at Replit, one of the top AI companies in the Bay Area. And so she basically designed a tool for people like herself, and she was able to pull somebody. She had a deep network of not only customers, but also talent. So she was able to pull somebody from her time at Replit with her to go and build the product. So it was built very fast because one of the co-founders was technical and probably could skip past a lot of even with vibe coding, like what you can do today, could skip past a lot of the typical first time founder pitfalls and just the deep network of customers. Like if you've been a GC for that long, you are a part of other groups of thousands of GCs, and you've been helpful for years with people in those groups without actually asking for anything in return. So it gives you a great list of people to go ask for feedback on your product as you're getting off the ground. So yeah, that's my take.
Incredible. Incredible.
I'll, I'll give a shorter answer just to save time, but I'll just say, at the Urban Innovation Fund, we're looking for companies that use breakthrough technology to crack open massive regulated industries like energy and GovTech and FinTech, areas where legacy players have been in control for many decades, and where we feel like AI has presented an exciting opportunity to kind of overthrow some of those incumbents, if you will. And that tends to be what we look for. Companies that can very quickly come in and like one for one replace a legacy player. So like we have a portfolio company called Scent that is basically like an AI native Twilio. And they spend a huge amount of their time early on really focusing on, one, delivering a really world-class experience, certainly, but also collapsing the amount of time it would take to fully rip Twilio out and put them in exchange. And that kind of one-for-one motion was really critical to their early momentum. And they grew 24x last year. And I think it really speaks to kind of the big picture vision that these companies need to have, but also like the really logistically like in the weeds know-how that you need to have to be able to come in and like get big really quickly. And so I think the one for one like rip and replace motion is actually really hard to do, especially for some of these complex workflows. And so we tend to look for companies that have thought really carefully about like who they're going after and specifically like what would it take for a customer to have to like delete and copy paste.
Yeah, absolutely. Um, My last question to you is, what would your recommendations be for enterprises when they're procuring new solutions? What do you think their strategies and as they build their own workflows should be?
Yeah, I think as a former operations person, I like the idea of asking folks on your team to kind of report out maybe weekly or monthly on what are some of the new tools that they're using, what has been the most valuable use of AI, so that you can kind of learn together as an organization in general. And then obviously have a central role that is tracking how many of these tools are being used and which ones are, most useful, and if there are any redundancies, because it's really easy to fall into that trap that usually early stage startups fall into, but not usually enterprises. So I would approach this like headcount planning, add rigor around it, make sure you're learning on the fly, trying new things. Yeah, and have an open mind.
I'll just add that I think sometimes people feel like an AI solution is going to be magic and it's going to, like I think sometimes it leads enterprises to expect too much of one product or have sort of unrealistic, like, and then it's going to solve all of our problems. And I think I think as Amber mentioned earlier, like being very specific about like what does success look like and what specifically is the problem that you're looking to solve is really important to both identifying the right tools and also evaluating whether it's working or not. I'd also just note that, people are talking about even the topic of this conversation today, AI procurement, like every company right now, in order to be viable, if you're using technology, you are either deeply AI enabled or you are an AI native company. Like there's no AI procurement, there's just technology procurement. And so I think the sooner companies can really flex that muscle and start to understand what does good technology look like in the age of AI, the better off they're going to be, and less siloing it into like, there's all the other stuff that we do plus AI. It's just like, no, no, it's AI. That's it.
Yeah.
I think the better off enterprises will likely be.
Beautiful. Well, thank you so much, both of you, for your time. It's been so helpful.
Thank you.
Thank you, Sena.
Thank you.
Bye.